Well, hello traders and investors. I'm LA Little and this is your weekly NeoTA Wrap where we take a look at these markets, doing it from a neoclassical perspective each time, asking ourselves what happened last week and what might it tell us about the coming ones. Do a show every Sunday evening, broadcast at or before 10 o'clock Eastern Time, is archived on YouTube and is on our channel LA Little. If you want to subscribe, reach up in the right hand corner and do so, and what will happen is anytime I push content you'll get a notification so you can keep up with what's going on in these markets. As far as what's going on, markets are almost all positive now. The one laggard is the big caps, right? The technology sector, Nasdaq down 2% on the year still. Russell turns positive finally for the year. As far as how these charts look, let's take a look at them. We'll start with the S&P 500. As you can see here, S&P has actually ended up higher, and I'm going to bring up the weekly chart, than that swing point high, changing trend. S&P was the last to do it of the majors. It does get over the swing point high finally, and now it is into the final set of resistance that remains. That big band from about this area up to the tops, right? That's the area that hasn't been breached yet completely. It's halfway through it. It's only about 2% off its all-time highs. S&P, phenomenal run, but is it going to continue? And if we ask that question, we look at it closely, what you can see last week is what happened prior, and that is after the last time we had the big run up, you had tails begin to form at the top of the charts. Are we going to see the rest of this form like we saw last time? And that is are we going to see this wild consolidation type moves take place next? That's the real question. This week you've got the Fed, you got the Bank of Japan, you got currencies. All of that has the potential to turn this market and to turn it very fast. And turning our attention to other areas of the market, look at the Nasdaq. Look at what's happening on the Nasdaq as compared to the S&P 500. Here you actually have a little range that had taken place. It's still barely holding on to it as of Friday. There's a little range up underneath it about the same size. You actually could combine these two, make other ranges to look at, right, that are interesting on the way down. What does that tell us when we look at ranges? Well, it says, hey, if you start breaking underneath one range, you can expect, right, that if you get there and you can't get back in immediately, you're going to try to get to the bottom of the range. This could be the precursor on the way down. Volume picks up as price comes down on Friday. Of course, as we said, Nasdaq suffering from big cap woes. In particular, it was Microsoft and it was Google on Friday. You got the Apple on Tuesday, you've got the Fed and the Bank of Japan on Wednesday. That's going to be the turning point this week. And if we look at the clues that are being left by the currencies themselves are going to be probably the biggest tell this week with respect to what happens to the markets, because the dollar has carved out a big range. And we'll look at the euro first and ask ourselves, is the euro now doing the ABCD structure to the backside, and will it continue to do that? You know, if we pop the ABCDs, you got let's try that again and clean that off. If we get the ABCD structures, here we go, starting up here, right, B point here, C, D point would take you back into these two big bars. That's where it's trying to target. As it comes back, the question is, will it continue to pull back inside this bigger range, right? And if we divide this range up, right, that ABCD structure will take it back towards the bottom of that range. You've kind of got these two areas that are key part. That ABCD structure takes it right into here, just as exactly where you'd expect it. I'm kind of thinking that we're going to see that pullback continue into the earnings, not the earnings, but the Fed announcement and the Bank of Japan announcement, and then that's where we'll find out what it really wants to do. On a long-term basis, right, on a monthly basis, this is just a big range. If you turn this upside down, you'll see the dollar chart as well. They look exactly the same. This is the range. This is where it's holding. Is it going to hold that range or not? If it is going to hold that range and work its way back to the bottom side of this, then of course that's going to push the dollar up. That's going to hurt commodities most likely. It's going to help equity markets in Europe, which potentially could help, or at least not hurt equity markets here. Would probably hurt the all of the Asian markets with the exception of Japan, unless the Bank of Japan does nothing and we actually see the dollar appreciate against the Bank of Japan, do nothing, or actually depreciate against the euro and do nothing itself, basically stand still or slightly higher on the dollar. That would be the Goldilocks case for gold probably, and that is that the yen surges while the euro pulls back and the dollar doesn't move, allowing gold to continue higher. And so that's going to be the big question this week. I'm really curious to see the way it plays out, and do we see those kinds of variations that allow us to get a continuation in the metals markets, which look pretty strong. Now, we could look at the metals market, but we could also look to our friend to the north, the Canadian market, because it's essentially a tell, if you will, on what's happening in the commodities. Canada breaks out, breaks over multiple swing points, does it on multiple time frames, has a pretty good extension going, has another range that is set up here that wants to take it still higher. That's one of the things that makes me think that we may see this market continue in terms of commodities. Here's that swing point break. You get the breakout on multiple time frames last week, targeting this next swing point high and potentially this breakdown bar, which is about 14,277. The Canadian is sitting at 13,874. So still another 2-3% to the top side. Looks like it's left here. That also is evident on the ABCD structures if we're looking at those. And so if we pop that up, you're right, you have an A point down here. The B point is this bar, the C point there, and then that would take it up into this area. So you can see the Canadian market not signaling any kind of pullback in the commodities. If Yellen does come out and starts to tilt a little bit more to the more hawkish view, then we may see that dollar start to work higher. But if the euro is able to work lower, if the yen is able to work higher as well, that dollar may not appreciate as much, and maybe that's the magic formula that's going to probably or potentially take place this week. I think that gives you a good idea of where things are. The equity markets are not the place to be putting all your money right now in terms of stocks themselves. If we're looking at, stocks like SBOX or Microsoft or Google or Coca-Cola or any of those, right? Those stocks are being hit right now. You're up at resistance. There's no way to deny that. Trading is about finding the high probability trades, and it's not a high probability trade when you're looking at a market that has done this, now has done something like that, and is right up at the top again after making a huge run off the bottom. Is not the place you want to pile into the common stocks that everybody else is in. Yeah, you can pick your sectors, but you don't want to just buy the market, so to speak, and buy it in bulk at these price zones. Top of this breakdown bar is 2112. Where are we at? 2091. Where did we get to? 2111. I'll leave it at that. Have a great night. I'll see you the rest of the week. Take care. Until next time, good night.